Good afternoon, everyone. Pre-market video for tomorrow, September 22nd. What are we seeing in the markets here? Well, I'm going to show you some examples of other manic markets that they don't just have a V-top. I showed it on social media, and I'm happy to show it here. I guess YouTube's called social media, but I was talking about Twitter, StockTwits, and LinkedIn. So I'll show it in here of what tops look like and how we don't look like one yet. We can have reversions, but tops take time. The first thing I want to show you, though, is earnings. So this week, September 22nd, you got a couple of big ones. You got Micron and you got Costco. Those are the two that I'm going to be watching. Now, keep in mind, I'm doing scans in the background. I've looked at hundreds of stocks, and I got to tell you, it's probably still small stocks you want to look at. But at this time of year, it gets a little dicey. It's November when these small caps really kick in, but we're going to look at those anyway. So the first thing we're showing you the earnings. The next thing I want to show you in here is economic reports. You'll see most of the stuff you know about. You know about the PCE. All you have to do, like we've talked about over and over, is look at the DBA and DBC over the last month. I'll show you that in a minute. So if you have a muted kind of inflation reflected in ETFs, you're probably going to have muted core PCE. Keep that in mind. It's been working. You do have on Tuesday Powell speaking. I don't think he's going to say that much. Now, getting back to it about commodities, let me show you what we're talking about. If you only have TradingView, you're not going to see this. So I just want you to know that you're not going to see what I'm showing you in here. But basically, if you go into this, and you go into the Dow Jones Commodity Index, you know I love doing that for you. And you'll see that if you take the DJCI, you're going to see it's actually gone down for a week. As you see, it's gone down. So if you take a month look back, you're going to see it hasn't done anything. It did go up somewhat. That was reflected in the prior reports, but the ones now, it's going to be a non-event. If you only have TradingView, then it's going to be like the DBA. As you see, it went down, and the DBC, which also went down. The DBC is more like has crude oil in it, DBA more agricultural. So I don't think the PCA is going to be that big a deal. Now, what is interesting is that the Fed cut last week as expected, but that the 30-year bond went down, not up. Very rare to see the 30-year bond go down at the same time that the commodities go down, but that's what you're seeing. Like I said, though, with the Fed cutting, I think you're going to see the yield curve steepen, the 30-year in the long run staying elevated, and that's why the curve will look like the two will look like that, and then it'll curve. That's what they mean by yield curve. And I think it'll steepen a little more. We'll see what happens to the DBA and the DBC longer term down the road if they have another leg up. So if you see this start to turn up and go to a new high, that's going to be a big problem for the long-term bond. Now, what else are we watching? Well, I thought, number one, I'd show you long-term sort of charts. And what I want to show you in here, like I said, manic markets. So what do I mean by manic markets? Heck, this has been straight up. Go and look at the ES here. Holy cow, straight up. So what I thought I'd do is go back to the SPX. I'd take off everything from here, even the indicators. You got any of the moving averages or ATR trailing stop. What I thought I'd do in here is show you the S&P on the left on a weekly chart and on the right on a daily chart. And what I wanted to show you in here, in fact, I'll show you actually on a weekly chart here. So we're going to go back, and like I said, I've already done a video on this. The more times you could connect a trend line, especially if they're bunched together, the more significant. What I mean by that is here's a nice trend line, but as you see in there, and I'm going to show it red because we're looking for possibly bearish things, that's not tight. So what I mean by tight, let me go back to 2000. That's what I mean by tight. Look at that coagulation of all these trend lines you could draw. Now that you might say that's not a perfect one, you're dead right. but that is. Look at all the points of contact. And it worked, as you see. So it took a long time for this top to form. Right now, we're probably in that 1999 level where you have that straight up move and it takes time for that momentum to wane and then you roll over. So if you think that's a one off, go to 2008. Yeah, bless its heart. Look at that. Same thing. Sell off, snap back, rally to the trend line, just like you got the snap back to here. And as you see on the right, snap back to here. So that took width. That's a weekly chart, not a daily chart. So two things. The more points of contact, the more important. The tighter the amount of touches, the more important. And I wish that was more level, but we made money on the upside and the downside on those moves. Here, we made a lot of money on the downside on that horizontal, but you might have missed that. It's the snapback. Now, a lot of times what you get in here, I can add it in here, so you can add the MACD. What you're going to notice is the first break usually results in a oversold MACD. It's the overbought after the break that you look for the reversal pattern. That worked great. And in history, that's what works. Now, fast forward to now. And what you're going to see is you don't have anything like that. All you got to do is see that straight up. So did you have defined trend lines here in a weekly? You sure did. That's why we were bearish. Now you don't have it. So what's the other thing to notice? How many weeks did this take to form? A lot. So just keep that in the back of your mind that you don't have that yet. What do I think is going to happen? I think you're going to have a rally, a sell-off, a rally, a sell-off to make a defined trend line, but you don't have it yet, which means you're going to be able to find longs and shorts. Let me just tell you, the way I'm looking at it, I know the Alibabas have gone nuts. I know the Baidus have gone nuts. I think it's going to be the secondary stocks within the speculative, especially like China stocks, believe it or not. So if you go into here, and I'll show you, I built a list for you. So you're going to see that when I show you some of the long ideas. Now, keep in mind, I know a lot of people know I like looking at short ideas. Almost all the stuff I've had of watch lists in the last 6 months have been long ideas. So you got August. So how about this one? Well, I'll show you. We go to September, and I did a September 21st. And all I did in here is I want to show you some of these. And you're going to see that some of them are definitely Asian stocks. So you got the V-nets of the world. So keep that in mind in there. You got the V-nets, and as you see, it's starting to turn. So you have a number of them that have that type of pattern. Some of them Asian, some of them not. WRD, we ride. Look at that turn. So I have no problem playing some of these to the upside because we're in that kind of environment. The one caveat, I would definitely take the stocks that are already over moving averages. I've just seen that work a lot better. And what I mean by that, I want to see the 9 over the 20 or across. See that little arrow? It crossed right there, and that was good for about $1.50. No problem with these stocks, and I'm going to be looking at stocks between 5 and 20. After a big rally, those are usually the next to go. And you saw it with the $30 stocks. The CRSP starting to go nuts. The BEM starting to go nuts. And that's a 3-day chart. Holy cow, look at those moves. So there are going to be a lot of these stocks on the left, which I'm happy to share during the chat, of these kinds of ideas that we'll look at on the long side. On the short side, well, you know, I'd love to talk about JP Morgan, a lot of these financials, but keep in mind, there's a ton of IPOs. JP Morgan and Goldman Sachs benefit from that. If you want to know, though, is it an accident waiting to happen like 2000? Well, I'll show you. I'll leave you with this. This is the amount of IPOs coming out in this year in, let's say, the next 2 months. We're going to go to the IPO calendar. That's upcoming. It's talking about right here in September on IPO. Until you look at how many were priced, that's a lot. And then the filings, check out the amount of filings. Holy Toledo, that's a tremendous amount. And eventually that'll suck the life out of a lot of money deployed for stocks, but it's not there yet. Like I said, combine the theory with a chart pattern, you're not there yet. So that will matter, but because of that, it's extremely difficult to play the JP Morgans, the Goldman Sachs to the downside, because this really benefits them. Also, with lack of regulation, you'll probably get a lot more takeovers. We'll be looking for unusual call activity. I know Intel had some. I never thought it would go up 7 points or even more. But yeah, that had unusual, but it accumulated over a long time. It wasn't like one day. Not that easy. Have a great one. I will be on first thing in the morning. Take care.